Investors will often try anything to try and gain an edge and outperform the market, even making investment decisions based on what month we're in. But does Bitcoin actually perform better during certain seasons? Today we're going to be looking at Bitcoin's performance seasonality to see if basing your investment decisions just based on what calendar month we're currently in is actually a viable strategy and something you should look to when making your investment decisions. And where better to start than one of look into Bitcoin's new portfolio tools, which is the monthly returns heat map. And prior to the month of September, many people, especially on social media, were fearful that September was going to be a fierce downwards month for Bitcoin, purely just by looking at the previous performance we'd had in September over the most recent years. And while we have had some subpar performances in September, ultimately basing your investment decision based on just something that's happened previously isn't always the best case, especially when this doesn't actually take into account any real data, any fundamentals. It's purely psychological investment decision making, which historically isn't the greatest strategy. And ultimately, anyone that sold in anticipation of a downward September ultimately lost out a little bit because September was actually a positive month for Bitcoin. It seems that the market decided to punish everyone that thought the obvious was an inevitability, when in fact the market usually punishes as many participants as possible. But this doesn't mean that September is always going to be a bad month or always going to be a good month just because people expect it to be bad. In fact, Bitcoin does have some observable seasonal patterns. So to start with, Bitcoin does usually not perform great during September, but a better way to actually almost predict September's performance is not just base your investment decision based on the fact that the month is September. September's usually influenced by what's previously happened throughout the year. For example, September usually has a bad month following a bad month in August. Usually there's concurrent downwards price action months, or if August has an exceptionally positive month, again, it usually indicates that we're maybe overdue a little bit of a pullback. In fact, you'll notice that September's main pullbacks were on years where Bitcoin's price action was decreasing anyway. Red years for BTC typically lead to red months for September, which may seem obvious, but in a green month for BTC, there's not much of an obvious observable pattern to September's underperformance, especially when removing the influence of the previous month in August. In fact, there's another often cited seasonal performance strategy, which is to sell in May and go away. But in fact, June and July are two of Bitcoin's best performing months historically. So this thesis doesn't really hold too much credence, especially, like I said, taking into account other influences. If we look at something like the S&P 500 to Bitcoin correlation, because a lot of this is also influenced by the fact that many in traditional markets also believe in seasonality performance for assets, we can see due to Bitcoin and the S&P 500 very strong correlation that we could maybe even look to see if the S&P 500 has historically negative returning September returns, to then again maybe give us a little bit more insight. And on looking to Bitcoin, you can actually use the monthly return heat map to look at a few different assets. So again, we can look at the S&P 500, which again has historically had some underperformance during September. But looking at this article, this isn't always the case, and it isn't just because we're getting into autumn and getting into the latter stages of the year. In fact, this report shows that, again, similar to what we noticed with Bitcoin, the S&P 500 usually has negative performing returns in September if the year had negative performing returns, very similar to Bitcoin, or if up until August we'd had exceedingly positive returns, again, very similar to Bitcoin. In fact, what many fail to ever consider is that the two concurrent worst performing months usually December and then January. If we look at something like the stock to flow model, maybe this gives us a little bit more insight into this seasonality effect that we see. If we just look to this, we can see that September has often occurred within just a couple months of the halving event, a period in which Bitcoin has extreme periods of volatility. If we look to the first halving here, we could see that September was just a couple months before this halving event. In 2016 here, it's just a couple months after the halving event. And again here in 2020, it was once again just a couple months after the halving event. So really this seasonality performance, I don't think is anything to do with the fact that just the month of September is coming around. It's usually influenced by other factors such as the year-to-date performance up until that point, as well as what it may also coincide with, such as the stock-to-flow model, the Bitcoin fundamentals that come into play, as well as traditional market liquidity cycles. If we look at something like the global M2 year-on-year rate of change compared to the Bitcoin rate of change, we can see again, September usually is the turning point for global M2 liquidity. It's maybe just a few months off again, but this is enough of an impact that really maybe doesn't completely negate the fact that many investors may sell just on the belief that there is a seasonality divergence in performance. It just seems maybe coincidental. It's a case of correlation or causation, but it can become a self-fulfilling prophecy. If enough people believe something is to be true and act on that, then maybe eventually it does become true. But like we said, many expect Q4 to be a great performing period for BTC and risk on assets. And the data does actually support this, although excluding December. But again, this is often influenced by the performance we'd seen up until Q4. In red years, Q4 historically does not perform very well at all. If we have a downward year, it seems that most months are downwards. Whereas if we have a very positive, a bullish year, especially when it coincides with potentially bullish traditional market factors, global liquidity cycles, then typically we also see positive Q4 returns. Also, if you haven't already, please don't forget to like the video, subscribe to the channel and turn on notifications to ensure receiving all of our content as soon as it's released. And make sure to check out the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. Many traders and investors thought a downwards price action September was an inevitability for Bitcoin due to previous seasonal performance. However, this was not the case. And while Bitcoin does tend to have some observable patterns, it seems simplistic to conclude this is due to the page of the calendar we're currently on. And the same is true for the S&P 500. There's often other influencing factors that have a massive impact on whether any particular month is going to be an upwards month or a downwards month. And while we can't be certain if monthly performance is causation or correlation, it may be worth acknowledging past performance as a self-fulfilling prophecy of investor behavior, or there may be just an element of coincidence coinciding with other factors such as global liquidity that provides some confluence and usually just provides a greater probability of outsized returns during certain months. However, given all of this, if Q4 is a good month for Bitcoin, I won't complain. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on Bitcoin's performance seasonality. Is it something that you ever take into account, or do you believe it's correlation, causation, coincidence, whatever? As I said, let me know in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.